Hey traders, welcome to Charts and Coffee for Wednesday. Great to see everybody. Last full trading day of this week and last full 3 trading days of the month. So we're in that last 3 trading days of the month where if we are going to see redemptions in terms of that typical monthly type routine, this is where it starts to get concentrated. So definitely we'll be keeping an eye out for that. Just a quick review though of our economic calendar, because normally this would be a day, and I still do think the second half of the day might get sort of phoned in, but take a look at Wednesday's economic calendar and we are not lacking at all for some high impact hot zones. We've already had the preliminary GDP. We're going to have core PCE. Now remember, that core PCE is the Federal Reserve's pet inflation number. They don't look at the CPI. They don't like the way those numbers are crunched. The PCE is a very interesting gauge of inflation, and that's the one that the Federal Reserve likes. So that's coming out at 10 o'clock today. New home sales coming out, University of Michigan sentiment, all that's great. But then we get a look behind the curtain, FOMC meeting minutes released at 2. So this is not going to be a boring day in terms of those types of economic events that can move that sentiment needle. All right, so as we always do here in Charts and Coffee, we're going to jump into your questions. And first up is we take a look at the ZB, of course. So if we're taking a look at the long bond, the 30-year bond, I have to say that when I compare the 30-year bond, the ZB, to say the ZN, what I would say is I don't necessarily feel that we're on the bullish side of the bond narrative any longer, because we're below the 200 exponential. The trend that preceded where we are right now was down. So I don't know that I have a really great edge. Even when we reached the 200, it wasn't like we stopped there really cleanly. So I know you didn't ask about the ZN, but this is where the ZB sort of kicks open the door to the 10-year. And this is where, if there is a short to be had, and if there is a short that still has good structure, of course, structure will always precede strategy. This is where I would look. So thanks for the question. Next up is uranium. Uranium had a tough move the 19th and the 22nd. We saw 2 red grab candles. We saw weakness. We saw weakness that broke the trend that's been in place since really arguably the 7th of September. So that's a pretty long-term trend that got rocked on the 19th of November with that first of then 2 red grab candles. Doesn't mean that it doesn't mean in any way that it's a short. It just means that we start looking at oversold buys. Now, there are a handful of stocks that do track with uranium. And for those of you that are in the mastery, you know that we said, yeah, we like uranium still. There's probably a fade buy off the floor that we like, but let's build a position in CCJ. It did not get rocked to quite the same degree that uranium did. So I'm with you on uranium. Just right now, we have refocused that same narrative to CCJ. All right, next up is Oracle. Okay, so taking a look at Oracle, I would have preferred to see the 55 hold a little bit better here. I will sort of reserve judgment on Oracle and maybe take a look at it next week. Let's see how it shapes up through the remainder of this week, and then go from there. Should I be looking at URA when trading uranium? That's what I look at, AJ. URA. Yeah, that's my preference. And then the stock that tends to track with it, I'll look at the CCJ. All right, next up is Dell. Okay, gosh, I haven't looked at Dell in a very long time. Let's take a peek, shall we? So Dell, gorgeous uptrend, good earnings. This is a good entry point. Well, had good, it had good earnings. We're going to open up at 55 and a half. So here's what I'd say. The first window, for those of you that aren't familiar with my 642 window, starting about 6 weeks out. So if earnings are on the 23rd of November, go back 6 weeks, and that's going to put us approximately the early to middle point of October. So let's call it, again, go back 6 weeks, go back 42 days. And then going right into earnings, starting about 2 weeks out, I'll sort of shut down anything that I'm doing inside of 2 weeks, because implied volatility starts to increase. And as a long call, long put type of trader, that's definitely going to be difficult for directional debit type trades. So now that it's out of the way, there's this pre-earnings window, there's a post-earnings window. And if we can maintain support at or above the 55, yeah, I'm good with that. But let me be specific. It's really got to be an entry somewhere between 55.10 and basically 54.10. So I'm very specific about where my window, my trigger is, and that's what I would be looking at. Hey there, Dorothy. I saw you on Benzinga pre-market. What a great, yeah, I had, I've been on and off that show for a lot of years, and Spencer hit me up and asked if I wanted to talk about inflation. And so, yep, they're good guys. They're very good guys. I appreciate that. I appreciate that. Is UNG a buy here? No, and for two reasons. One, structurally, it's a little bit of a mess, and I don't want to say no that it's unbuyable, but between 1582 and 1480, 1475, there's a pretty good zone for a soft floor in that area. We're not in that area right now, so that's where the first no comes from. The second no has a lot more to do with the fact that that natty gas, you know, I won't say no. If you're looking at natural gas for the first time, I'll be straight up. The best seasonal and technical trends are in the rearview mirror. So I don't want in any way to compare what we've been doing since August to what's happening now in November. No, in terms of where we are. And of course, I have to look at natty futures to make a judgment on natural gas. If you're in it already, let's look for that retracement of about halfway up the range. And it looks like we have some nice volume ledges at about 558, 557, that area. But I can't say of all the things that I could do right now, this would be at the top of the list. So not where it is right now. So if someone says here, I'm really specific. It's got to be down near the floor. So not so much where we are right now. Oh, looks like a lot of you do watch Benzinga. Okay, cool. All right. Yeah, I'd love to be on there more. They're great conversations. I think that whenever I'm on a show like that and, we're talking about something as large as inflation or something as large as, what's happening economically, I think there's it's really tough. And I hope I did a good job doing it. And the guys brought up a terrific topic. But I always want to, as I mentioned then, we have to separate the part of ourselves that's watching economic, whatever is happening economically, and separate that from the trader. So for me, I was kind of joking where I said everything is going to be buy dollars. I mean, that's my answer to everything right now. Buy US dollars. We're long US dollars in the mastery. We're trading dollars in the futures room, whether that's short euro or long dollars. That's been something we've been doing now for over a month, well over a month now. So that's one great macro and technical trend. But as far as my opinion on inflation, unless I'm a member of the FOMC, I just trade it. Who cares what my opinion is? I just look to take advantage of what seems to be happening in the wake of it. So if we persist in the dollar strength, one of the things that's going to ultimately happen is that I'll start to ask myself what benefits from a strong dollar at the commodity level. Now, it could be what trends, I shouldn't say what benefits, what trends would emerge in the wake of a strong dollar, which companies are the benefit, which sectors are the benefit, bullishly or bearishly, So we'll start to build, more dollar strength specific watch list. So yeah, it's always interesting to be able to talk about things that aren't necessarily going to result in a trade at the end of the conversation. But for me, if we're going to have a cool discussion at the end of it, all right, what's the trade? Yeah, that's the way my brain's always looking. What are my overall thoughts on markets for the remainder of the week? Um, call it a day. I, you know, Black Friday sales, right? I mean, let's use Friday for the national holiday that it is, which is go broke saving money. Is that what I'm trying to spit out there? Go broke saving money. So that's what the Friday holiday is, right? So yeah, today's it. Let's see what the market does with the aftermath of the GDP. Let's see what the market does with the PCE. Let's see what the market does, the peek inside what's going on in the conversations within the Federal Reserve. And then, really, that's it. If you want to touch base, I always do a charts and coffee on Thanksgiving morning. What better a time to do a charts and coffee on a day of thanks and sit around and be thankful for the fact that A, I get to trade, and B, I get all of you to talk about the markets with. So short of that, not a whole heck of a lot other than, yeah, I've got my Black Friday shopping list ready. Thoughts on NUE? All right. So NUE is a conversation about, as many of you probably already know, more ideally, the XME, right? More ideally, any conversation about NUE of XME and SLX, both of which NUE has exposure. The XME is actually in a better trend, when I compare it to the SLX. NUE is about 4.5% of XME. So then the question starts becoming a little bit more in terms of, well, which has good relative performance? And there's a lot to like in the top holdings. But here's what I'll say. Freeport McMoran has been the one that I've been focusing on because we had this really nice dip. NUE, as it stands right now, and even frankly yesterday, there's no trade for me. Might be for somebody else, no trade for me. The trading window for the NUE becomes a window that happens in there. There we go. That's the window. That little circle. Hopefully y'all can see that clearly. That little circle in there becomes the potential interesting window for us. And why? Because that's where we got, the dip into the wave. So NUE yesterday or today, that's just a no. But and I think there are better looking stocks in terms of double green, but I think that and Freeport McMoran are probably two of the recent dips that were buyable. And again, whether it's NUE or Freeport McMoran, I think it's kind of a similar trade, but the timing matters. And I'm in FXC or FCX. I'm in FCX. All right. So that's my thought on NUE. I think there's probably a path of higher highs here, but when you buy into it, when you build that trade, that trigger, oh my gosh, gang, it's so important. When is the trigger that compels you to get into that market? All right, next up is CC asks, it seems growth stocks are in a bear market. Do I think they will turn and fuel the indices higher, or are they precursors of what? Oh gosh, I'll tell you this, CC, and thank you for the question. I'll tell you this. I have no idea. But every great trade starts with a question or a hypothesis that gets answered. I don't answer it. We don't get to answer it. The market answers it. So a lot of times we have our watch list that leads to trades. But what leads to the watch list, right? So if there's a process to ultimately get to a trade, what is the precursor to a watch list? And it's cool questions like that, CC. It's cool questions like what if and what about and how are these? And those end up becoming a watch list of, well, keep an eye on this for weakness, keep an eye on this for strength. So I'd have to say that question for me is sort of the precursor to the watch list. That question for me is not quite a tradable or investable idea, but it's definitely one to keep an eye on. And if I start to see those particular stocks and those particular sectors behave in a way that matches up with a hypothesis, well, then I know. So, in other words, I'm always going to wait for confirmation that my idea is not just one that exists in my head alone, but that it's actually playing out in the market. And it doesn't mean that we're going to miss the trade. I think there's a need oftentimes for traders and investors to get in really, really early, as if we're all, initial round investors of some hot IPO. I don't believe that to be the case. I don't want to get in too early because I might sit through a lot of waiting. I don't want to get in too early because I could be wrong. I think we can get in at the earlier stage, right? If you think about that bell curve, I don't have to be a super, super early adopter, right? And so I don't mind waiting for a little bit of evidence that my hypothesis is being confirmed by price. Thank you for the question. UUP, yeah, we're going to keep looking for long dollar. Now remember, UUP is the dollar basket. So UUP is about 58% euro, and then the fairy dusting of everything from pound to yen to Canadian dollars, Swedish krone. The idea behind the basket trade is that if I feel that the dollar is going to gain on most of those currencies, this is a cool way to engage it. But we always want to be pretty specific. And those of you that have taken my Forex class, I believe we did that this year, early or last year, turning into a blur. But you all know this concept of contrast that I use. And contrast is why pairs move the way they move. And contrast is understanding what are the strength stories in here we go. What are the strength stories in the currencies and what are the weakness stories? And as long as US dollar is one of the strength stories, it makes sense to buy it against the weakness stories. Pound, euro, yen. That's just over half, not weighting wise, just half the currencies in the UUP. So you can see why it's benefiting. But if you want to be more specific, this is what you look at. You look at those relative performance reads, and then you say to yourself, all right, where do I want to buy dollars specifically? Not just the basket, but do I want to buy dollars against euro? Oh, heck yes. Puts in FXE, puts in 6E, short 6E, long DX, calls on DX, calls on UUP. It's really the same trade because the correlation between the euro and the US dollar is incredibly tight in terms of being a negative or inverse correlation. So yeah, dollar is going to continue to be something. We've been in dollar now again for quite some time, and I don't think I'll be doing anything but saying, hey, let's buy the dip on the dollar for any time. We're not changing that anytime soon. UPS double green. Look, IYT has made a huge shift. And so a lot of those stocks that were looking like dumpster fires for a lot of summer and early fall, looking pretty darn good. And UPS would be a buyable on the dip conversation. Yeah. Now, no, I won't buy it here. Look, my triggers, my windows are really, really specific. And so that alone is a little different than what most traders do. If they like a trade and they feel it's going to keep going, some traders are not as discerning about, hey, it needs to be in this specific price zone before I buy it. I look at it this way, right? There might be a lot of interesting opportunity out in here or out in here, right? But I am looking specifically at a very sometimes tight zone. And unless I get not just price action in that zone, but the kind of momentum I'm looking for, it's that kind of specificity that gives us great fills and allows us to control risk and allows for, ideally a better win rate. So that's what I try to focus on. So yes, on a buy, but no, not where it is right now. NVIDIA going to keep pushing lower, fill the gap. Uh, so again, nobody knows, right? Is there a chance it could? So, but what I love kind of buried in that question, Anthony, is you have a plan, right? If the gap, so this is the way we should think about trading. At least this is the way I think about trading. If the gap fills, what do I want to do? I want to be a buyer. If the gap doesn't fill, what are my other alternatives? Not the gap's going to fill and then we're going to do this. I don't know if the first part of that statement is even going to happen. But I do, as again, got to go back to this. I do know, just like I know the pitcher's going to throw a pitch, we know the markets are going to do something. But is it going to sail across the plate in that zone that we can do something with? And that's our job as traders. I think a lot of traders feel they have to predict market action. We just have to know what we want to do if price gets to a certain area, and then we wait for price to get to that area before we do anything. That's where that trigger zone is everything, right? That's what the plan is. And I think those of you that are big sports fans, watching Monday Night Football, watching the Bucks play the Giants, and there's a bunch of plays that the offense could execute. They've got all the different routes. Why do they choose a certain route? It's not because they want to do that play. It's because the defense is giving them a look where that play has an edge. And I think that's the same way we have to operate as traders. With the offense, you're the quarterback, you're the general of the offense, and it's our job then to look at the defense, see what it's presenting to us, and then run the play with the highest probability. We don't know what the defense is going to do. We have to respond to it. So that's why I think trading is counterpunching in so many ways. And just like that, it is time to move on into the Sector Secrets Mastery, where every single Wednesday, we have a live trading session. Going to do a little bit of day trading in there. Also take a look at our longer term positions. And hopefully I'll see some of you there for our mastery. And in the meanwhile, have a wonderful, happy Thanksgiving, everyone. I hope you're going to spend some time with your family and friends. And whether that be today or tomorrow or Friday, tonight, I'm going to go see House of Gucci. Super excited to go see that. So I hope you guys have some fun away from the computers. The markets will be here when you get back, I promise. So for a lot of you, if you want to come back on Monday, or you want to catch charts and coffee with me tomorrow, or if you want to be here for the half day and just kind of keep in touch with the discussion of the market, great. But don't force yourself to make any significant moves. This is not the kind of week to do it. All right. Have a good one. Be good to each other. I'll talk to you tomorrow.